We start in 3 minutes, 2.5 minutes actually, 2.5 minutes and counting. All right, good morning, Checkmate crew. It's 30 minutes after the opening bell of the New York Stock Exchange. It is 10 a.m. Eastern Time here on this Wednesday, November 30th, 2022. Yours truly, Mickey Blindside here with your market memo. So good morning, everybody. I hope everybody had a great day. So news of the day, 5 a.m. Eastern Time, we had the European Eurozone CPI data come out, and we had the first declining month-over-month CPI data come out of the Eurozone. It was 10% year over year CPI reading. I believe the consensus was 10.4%. Last time it was 10.6. So we're seeing inflation readings coming down. So it's about time for them. Their core stayed about the same, but their headline numbers came out lower. It's about time. They're lagging us by about a month or so. On that news, we saw the euro currency rally, as well as a rally in Eurozone stocks, the Euro Stoxx 50 index, as well as the DAX, the German stock exchange. So we're seeing a rally in there. Generally, usually, whenever the euro currency goes up, generally the DAX goes down because, Germany is a big exporter. And so whenever the euro currency goes down, it makes their exports more competitive. However, in this environment, that is not the case. It's the opposite. As the euro goes up, all these Eurozone assets will go up. The first, you got to understand why the Euro's currency was going down to begin with. The reason it was going down to begin with was because there was a lot of fear of industrial slowdown because, of potential energy rationing, potential closing of industrial areas to save fuel and energy. So because of that, the euro currency came down for most of this year because it wasn't justifiable based on, Germany's export numbers. If their balance of trade goes down, all right, then it doesn't really justify a higher valuation on that euro over the dollar. And so we saw that coming down as, the fears of industrialization were going down in the Eurozone. But now that's not the case. As inflation is coming down, there is, this a risk on sentiment. And so, the people will start bidding dollars. They'll take dollars out of their dollar denominated account, start buying euros to start producing things in Europe. So that's where this is coming from. So yes, I got a few DMs saying, oh, usually if you look at the relationship, usually whenever euro goes down, usually the euro stocks go up. But these are different times, and so those types of just blind correlations don't always work out. You have to look at market conditions. But anyway, I'm going off on a tangent. But anyway, the Eurozone CPI came out lower than expected. We saw the euro currency rally, as well as the euro indexes. Now, I'm still in my FEZ put position, which is a bit underwater. I do have until February. We'll see what happens here. At some point, I do want to buy back the short puts on my put debit spread. Right now, it's around, with enough patience, I might be able to get out of it at around 25 cents per contract. If I could get 20, that'd be even better. But I am looking to exit the short side and then just be naked long on the 36 puts, so that if this does drop, I can take more of that profit. We'll see. Okay, it is almost like adding to the position. I am getting more and more into this position if I am getting rid of the short strike. But I am looking to do that. I did plan on doing that from the beginning, so I do want to get out of this at around 20 and then have that naked long put. So just in case if the market does drop, then I can enjoy more of those profits. Now, having said that, if I buy back these 31 puts and then the market just keeps going up, well, then I just wasted that premium. So it is adding more risk to the trade. But again, I'm willing to take that risk. So we will see. Okay, so that's the Eurozone positioning. There's still a lot of dollars in dollar-denominated accounts overseas. I think if the euro just keeps going up and if it starts actually going into a weekly uptrend, okay, on the weekly chart, if we see a higher low being formed and then another higher high, we could see a lot of that money coming out of those dollar-denominated accounts and get into risk on currencies and risk on assets. And so, I'll believe it when it happens. Okay, so it hasn't happened yet. We still are in a downtrend on the euro. Okay, we shall see what happens. But again, if we start seeing a weekly chart trend reversal in the euro and the British pound and in the Japanese yen, hey, that might be a very, very compelling risk-on signal that the currency market is flashing at us, okay? So I just wanted to give you that news. Speaking of economic news, on Friday, this coming Friday, we have the jobs numbers coming up, non-farm payroll. I think that's going to be huge. I think a lot of professionals are looking at that. I still keep in contact with some of my old colleagues that are still in the industry, and they're all talking about the same thing. Friday this week is all about the non-farm payroll, and they're looking at the labor force participation. Okay, this is the labor force participation number. It's published by the U.S. Bureau of Labor Statistics. All right, and so really a lot of this wage inflation is based on supply and demand. All right, so demand for workers is going up, yet supply is still down. So what do you think is going to happen to the price of labor? Of course it goes up, right? It's all based on supply and demand. So right now we're seeing supply coming down. Okay, after COVID, it kind of recovered, but it never recovered to the pre-COVID levels. Okay, it never really recovered to pre-COVID levels. And so if we do see that it is dropping again on Friday, I do think that the market we'll have a little bit of a pullback. Okay, how far does that pullback go? Well, I think that really depends on our liquidity data. All right, but I do think that if the labor force participation keeps going down. It did go down for the last 2 months. So if it goes down again, I do think we're going to have a little bit of a pullback. You'll probably see a lot of stuff in the mass media about, oh my goodness, the Fed has to be more hawkish. There's going to be increased hawkishness in the Fed. You're probably going to see a lot of that happening if we see those labor force participation numbers come down. Okay. Okay, so that's Friday, and that's what I'm be looking for. Now on Friday, if the labor force participation does go down, I do think the dollar index will probably go up. We'll probably see a rally in the dollar. And if we see a rally in the dollar, we may see some of our stocks that we want to get into pull back a little bit. For example, remember PLG? We try to get into PLG. Man, I am kicking myself right now because I was trying to get in at 160. Remember about a week or two ago, I said, oh, my first initial buy was 160. And then in the market memo, I talked myself out of it. And I said, oh, I'm canceling that 160 order. I'm going to buy a 141. That was stupid in hindsight. In hindsight, I should have just went for it at 160. Because now it's already a 175. So, but if the dollar does go up on Friday, I do think that a lot of the metal names are going to come down. And if that happens, you know what? I'm not gonna play around with this. I'm gonna buy a 160. Okay, so if we see this pullback on Friday, after that jobs numbers comes out at 160, I will be getting into PLG. Platinum. This is a big platinum name. You can go back to our last week's or the week before's market memo, and I go over my thesis on platinum and PLG specifically. If you look at platinum futures right now, platinum futures have been on a roll lately, actually. The whole week, it's been, I think, one of the stronger metals, if I recall correctly. Gold. Well, all the metals have been doing quite well as the dollar has been coming back. So gold, silver, all of these metals have been going forward. But platinum, I think, is going to have a lot of demand going forward, not just for precious metals, but also for industrial uses as well. Okay, it also fits with our China reopening theme. China is trying to secure as much of these industrial metals as possible. Platinum, palladium, lithium. Speaking of China, over the Thanksgiving holiday, we saw reports about lockdowns in China. I don't know how true those are. Okay, to be honest with you, I really don't know how true those things are, because if you actually look at U.S. listed Chinese stocks, they've been rallying this whole time, even with that news coming out. And actually, there was just recent news about the area in which Apple has its manufacturing plant, Apple's largest manufacturing plant. I don't know how to pronounce it. It's Zhengzhou, but they lifted their lockdowns just yesterday. So it seems like it was just a temporary lockdown. And if you actually look at the people that actually, or the institutions and the big money that can affect Chinese prices, the Australian dollar, for example, we use the Australian dollar as a forward indicator for Chinese stocks. It never really took that big of a dip. All right. And so I think when it comes to the money affecting Chinese stocks, it really didn't affect it all that much. Now, if I see on the weekly chart, if I see that this comes back down, makes a lower low, then yeah, okay, fine. Then maybe perhaps there's some unknown fears on China that really haven't surfaced yet. Maybe there's still lockdowns. Fine, okay? But I'm not going to base it off of what the media tells me. I'm going to base it off of what the data shows. And right now, if you look at Chinese stocks, they're all going up. I mean, ZTO, remember ZTO, the industrial name, the Chinese FedEx? Look at this. It didn't even care. Really, it didn't even care, all right? Let's look at HSI, which is the Hang Seng Index. Let's take a look. HSI, Hang Seng Index. If you look at it on daily chart, yeah, it did pull back just a little bit, but then now look at it roar back, okay? It is now, the Hang Seng Index, okay, is looking like it wants to do a trend reversal. All right, already on the daily chart, I would say this is a higher low, and it's already trying to attempt a higher high. And if it can, and already right now, Hong Kong's market is closed for the day, so technically there is a higher low, higher high already on the daily chart. On the weekly chart, you could argue this is a lower, this is a, you could argue that this is a higher low and it's already trying to attempt a higher high. So if for the week, if this can end up higher, I think that's pretty compelling that already the big money institutions are looking to get in on the China trade. Okay, there's a lot of money actually going into China right now. There's been a lot of institutional block buying, actually not just in Chinese assets, but really all across the globe. With global equities. Global equities have been seeing large purchases ever since beginning of October. All right, and China's no different. So I think all of this is really overblown. All this COVID talk in China, I think it's kind of overblown. I think some of you all took an Apple trade based on this. Good for you guys. I mean, if you guys took an Apple trade, good for you. I don't know if that sell-off in Apple is actually based on those COVID numbers or those COVID lockdown rumors or whatever. Because again, FXI, all the Chinese or American listed Chinese stocks, they're all up. Hang Seng Index is already making a trend reversal in the daily chart. Also, it's about to make a trend reversal in the weekly chart. And all the industrial names such as ZTO, they're all just climbing forward. All right, so I just don't see that rumor being true about those lockdowns. And again, just today, the Zhengzhou were right. So I don't really see that big of a problem. I do think that China probably is going to abandon their zero COVID policy. I think they're signaling that they're okay with some COVID and some deaths. I think they're going to be okay with that. We'll see. Okay. I haven't made any moves yet. Again, for my China play, I am trying to get into ZTO. I would like to get into ZTO at 19 or 20. Is it going to happen? I don't know. I really don't know. I don't think it's going to happen now. I think it's running away from me. So it is what it is. Maybe if we get around here, we might run into some supply and maybe it might come back down. If we hit here and then we come back down, we form a base, that's where I'll buy ZTO. All right. But that's my play on China. We'll see. Okay. Again, I just think the mass media is just a lot of noise. I think the Australian dollar, that's going to tell us where China will go. All right, in the end, it's really about the Australian dollar. We'll see. I'm just going to keep a very good eye on this. Not only is this a good forward indicator for China, it's also a very good indicator for metals. And you guys know how I feel about metal miners right now. I'm trying to overweight my speculative portfolio for the next couple of years with metal miners. Again, uranium first, uranium first, platinum, then silver, and then gold. Speaking of uranium, what's going on with UUUU? Let's take a look at Quad U. Quad U, coming back up today. Very nice, very nice. Okay. We'll see any day now, according to Quad U's earnings release, as well as the earnings releases of some of the other uranium names. The Department of Energy is supposed to come out with, whoever they choose as their vendors to add to their uranium strategic reserves. So, the Department of Energy announced earlier this year that they wanted to stockpile uranium for their strategic reserve, and they're picking a few uranium miners to fill that contract. And so Quad U is a good contender for that contract. It's supposed to be for, I believe it's like 500,000 pounds of uranium. And so, right now at around $40-50, it's a per pound spot. That comes out to be, about $20 billion or so. So that, that would be, a pretty big windfall for whoever gets a piece of that. I believe they're trying to split it up into 100,000 to 250,000 pounds per vendor. So we'll see. We'll see how much Quad U gets. That's very speculative. I'm not basing this trade based on that one event. I do think on the longer term, though, with energy usage and energy security, it's really hard to talk about energy security without talking about nuclear energy. Just open up a physics book and you'll see why. It's just it's very energy dense material that uranium is. All right. And so I think, again, when you talk about energy security for most countries, you have to include nuclear in that conversation. Speaking of energy security, also too, the use of coal has been going up. And with all the supply, all the supply chain issues and also the issues with Russia and Ukraine, a lot more countries have been using coal, not just in the United States, but all over the world. I think Germany right now made a huge increase in coal usage. A lot of the Asian countries are also doing that as well, too. I wanted to introduce a couple of coal names that I want to get involved in. Okay, so I did a little bit of research. HNRG is one of them. Now, the only problem with HNRG is that it just ran up way too much. Okay, it's literally run up way too much. Beginning of the year, it was around $2.50. Right now, it's already, flirting with $10. Okay, so it's already up about 300% this year. 300 to 400% this year. So that, I don't know how far of a pullback this will go, but another name that I'm looking at is AREC. And this is a little bit more speculative as they have not obtained break even yet. There was actually some speculation that last quarterly report, they might report a break even quarter. I think it's going to take them a little bit longer than that, maybe perhaps next quarter or the quarter after that. So this is a very speculative name, AREC, and I would only put this, when I buy shares, if I were to buy shares of AREC, I would consider it like buying call options. So I would position this very, very small. Okay, I wouldn't get too big into this. Again, very speculative. It's under $5 stock. It hasn't broken even yet. There was a lot of speculation in Wall Street that it was going to break even for the last quarterly report. It didn't happen, so we saw a little bit of a sell-off after that earnings announcement. But if coal usage goes up and the price of coal keeps going up, we could see AREC break even. And then we could see this rally. And so, this is not something that I would hold for longer than like 1 or 2 years. This is very temporary, okay? I consider this a swing, okay? So I'd be buying shares and then I'd be trying to get out possibly around that 275 to 3 zone, all right? I wouldn't be holding this, for that long. Anyway, this is a potential play that I'm looking at. And as I place the trade, as always, I'll let you guys know on Discord. I alert you guys in real time whenever I take a trade. But, this is something worth looking at. As we get closer and closer to next quarter's earnings, I'll try to make a move here. If it can get down to like, let's say 140, 135, 140 zone, that would be ideal. Okay, that's where I'm looking at to buy this. All right, we may get that pullback, and if we do, I may scoop up some shares. Again, I'm keeping it really small. I'm gonna treat the shares as if they're call options. Okay, and over time they're gonna decay to zero, and we're gonna see a pop. And I'm just playing a pop, and that's it. Okay. So that's another coal play. That's some coal plays. I know we also talked about oil. Well, let's actually talk about oil, okay? I think there is an OPEC meeting coming up, OPEC Plus meeting on Sunday. And there's a lot of, I saw on Twitter and social media, a lot of people are betting really hard on this Sunday meeting that's coming up. I actually don't think anything big is going to come out of it. I don't think anything is going to change. I think the big meeting for OPEC is going to be the January meeting. this Sunday meeting, I think it's more of I don't even think they're meeting in person. I think it's all it's a a remote meeting where all the OPEC delegates are just going to meet online or something like that. But I really don't think anything big is going to come out of that. I think January is where we're going to see the big meeting. But as we can see, oil came back down to that level that we were talking about from before. This is where you remember the White House leak, where they were where there was a White House staffer that said they were going to buy at 80 on the spot market if for the strategic reserve, and right now the futures market is about $3 to $5 above. Or I'm sorry, the spot price right now, is about $3 to $4 above the futures price. Okay, so when we get to around 75, 76, that's actually when in the futures market, that's actually when the spot price is around 80. So we heard from that White House staffer that they were going to buy at 80, and so it looks like that's the level. We saw a lot of buying rush back into the market. That actually looks like a huge exhaustion, by the way, and then it's going up. Now, if it can hold that, I do think oil will go up a little bit higher. I think it will probably end the year, if it can hold this low. I think it's going to go between 90 and 95 by the end of the year. All right, and then next year, I actually think it goes higher. All right, I want to get in oil. Now, one of the oil names that I was talking about was getting into was deep sea drilling, BORR. All right, BORR is a great choice. All right, I do have another choice that you guys can get into. BORR is deep sea drilling. Now, deep sea drillers don't have the best financials right now, just because deep sea drilling is a little bit more costly than other types of crude extraction. So BORR is still on its path to try to get positive earnings. Although if it does happen, if oil does go the 90s and hundreds or so, I think deep sea drillers have the most potential upside. But if you're more worried about the fundamentals, you can also do GTE. Again, a junior miner. Okay, it's a junior oil driller. It's a very small company. However, and the financials aren't like stellar. However, they have been increasing their cash flow. They've been increasing their revenue. They've been paying off their debt. Their cash is going up for the last few quarters, and their debt is going down. I think if oil remains higher, higher for longer, they could really ramp up their debt payments. The cash flow will go up, and I think the market will notice, and this thing could go up. So GTE is also on my radar as well. Which one am I going to choose? It really depends on value, okay? It really depends on value. Whichever one really pulls back the furthest, that's the one I'm going to go with. But right now, I'm actually leaning toward GTE over BORR, over BORR, okay? That may change again soon. I don't know. But right now, I am looking at GTE right now. I'm favoring this one. If GTE can get to around, let's say around $1 or so, I'd be a buyer. I would be a buyer of GTE. And again, I'm going to just treat it as a call option. It is a low dollar stock, so there is a bit of speculation involved in this. Also, too, there's some risks. You're basically they need oil prices to stay higher in order for them to pay down that debt. So, if for whatever reason oil just shoots down to 60 or 50, then this thing can go. This thing will go less than $1 easily. Okay, so there is a considerable amount of risk in this trade, but I think it's, especially if you're an oil bull and if your thesis is that oil is going to go higher, I think this is it poses a very good reward to risk ratio. Okay, so add that, so I'm adding GTE to my watch list. All right, so there's that. In other news, crypto. Let's talk about crypto. We haven't talked about crypto in a while, and the reason why I haven't talked about crypto was because overall the open interest on the Ethereum options chain has been low. It's actually going down. Remember, it was like 5.5 billion. It was the high. You know what we want is to see 6.5, 7 billion or higher. That's really when options activity can affect prices. But then, you know, after the merge and after this whole FTX fiasco, we saw the open interest on ETH options on Deribit go down to 5.5 billion, then 5 billion. Last time I checked, about a couple of hours ago, it was about 4.6 billion. So it's still going down. All right, still going down. So again, I don't think there is a point in tracking those options and really seeing, you know, how that's going to affect prices, because again, it's just so little activity going on. But when I look at some of the altcoins are shooting up and they're performing better than ETH and Bitcoin. And we kind of saw that actually back in July. I mentioned that, just, you know, as a side note, that all these altcoins were squeezing forward. Okay. And so it usually, you know, it actually happened there first. It's kind of like our I guess junk bonds ADL. Actually, that's a really bad analogy, but you know, usually what you see is a risk-on sentiment in the junkiest part of the market, and then it just, you know, that translates to the whole market kind of going up. It's kind of, I think crypto is a little bit like that, where you see the altcoins really going up first, and you see the signs of the reversal there, and then you see ETH and Bitcoin following. I think that may be the case, but again, you know, that's just an opinion so far. Crypto is such a new market. Just because it happened 2 or 3 times before that doesn't mean it has to happen again. You know, that's a very low sample sizing. You know, it's so new that, you know, who knows, right? Maybe that was just all a coincidence. It could have been, but we're already seeing certain altcoins overperforming. And so again, we saw that back in July, altcoins were overperforming, and then all of a sudden ETH and Bitcoin kind of followed. We could see that happening right now. We will see. We're under that uptrend line when it comes to ETH gold. It was somewhat close to getting to that red line, but it never actually got there. Okay, and again, as I mentioned, if we see a really bad, or a bad reaction to the jobs number on Friday, we could see crypto and all risk assets taking a dump as the dollar goes up. So we might even get there. You know, who knows, right? Nobody can tell the future. No one's got a crystal ball to this. But I am seeing those altcoins going up. Some of the more altcoins there. I guess you could call it a short squeeze. And I think if that continues, that would be a sign that probably ETH and Bitcoin are going to go up too, at least temporarily. Will that actually mean, that it goes up more and more? I don't know. It could just go to that 1650, 1700 zone and then just sell off again. Okay. Because I do think there's a lot of supply here. There's probably a lot of bag holders from 1650 to 2000. All right. So we'll see. Okay. So that's my view on crypto. Right now it's kind of in no man's land. It's not really doing much. I wouldn't want to place a position right now, right here, just because there's so much unknown. I'd like to see a higher high and then a pullback if one were to go long. That would be the only trade that I would take. If it were to keep going up. And again, my plan really hasn't changed. I'm just going to wait for this, for this zone right here on the ETH gold chart. And if it gets to that red line, then I'll buy for my long-term account. If not, oh well, so be it. Okay. You don't have to be involved in every single trade. Okay. So there's always another opportunity around the corner. All right. Any questions? Anything else you guys want to look at?
Don't.
Can you say that again? I'm sorry. One of our members was in here. What did you want to see, Maya?
No shit, I didn't know my mic was on.
Okay, never mind. All right, then in that case, technical difficulties from our from our audience over there. Okay, so in that case, if there's no questions, if there's no comments, if there's no rude remarks, then in that case, we will call this a day. So that wraps up our session of the morning market memo. Our Discord invitation link is in the description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywall. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, I'll be back on tomorrow, 30 minutes after the opening bell, 10 a.m. Eastern time. Trade safe. Have a wonderful day, guys.